Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground.
Hi, and welcome back to the Conscious Day Trader. Today is going to be an exciting day for the ICT world following, because we're going to look at something that everyone is very interested and it's a question that I get every day, like the other two videos about the stops. If you haven't seen that, go and watch that video about the stops. The next one was about how to pass the boot camp. Today is how the beep do I trade ICT. How do I make money trading ICT concepts? It's always very complicated. It keeps going on and on and on. I don't understand it. Today we're going to use one of the most popular methods from the ICT, which is called the Silver Bullet. And I believe I've just had a look, or I've just watched one video of his on the ICT Silver Bullet, and I get it. It's super simple. I'm going to show you exactly on what to put onto your chart, how to trade it, how to make money out of it, and you don't need to know anything else. This is a proven strategy. A lot of people are using it currently, and you don't need to know all the ins and outs of order blocks, all the other things that ICT teaches. Super simple. He's actually given this strategy, and his a daughter, I think, is trading it, or son. I think maybe son. Sorry if I got that wrong. But we're going to look into it, and I'm going to tell you how to set up the charts. If you like all this, make sure you subscribe and like the video, because that's going to be shared to other ICT traders that need this help. Also, if you're living under a rock and you don't know about this, we are launching a Discord, the Conscious Day Trader Discord, with our moderator Marcel, who's going to be our first moderator. You can jump on the Discord, which we're going to be launching probably next week, and you can write below Discord if you want to get the link. And we're getting closer and closer, and I know a lot of people are getting excited about this, and they're like, where is the Discord? I keep posting Discord, I don't see a Discord. Trust me, it's coming, and I'm logging all the names that have been commenting, and it's going to be with a priority of who comments, and I'm going to go in and let you know underneath the comment on when to receive that information. So without further ado, let's jump onto the charts, and I'm going to show you. We're going to actually start on a presentation which I've taken screenshots. You don't have to even watch the video. We're going to jump onto this slide here, which is obviously our trading view. We're going to jump onto where you can find this. If you go to the ICT 2023 mentorship, the 54th video, 54th video, you will find the ICT mentorship 2023 ICT Bullet time-based trading model. Okay, I mean, if you're that lazy and you haven't watched it yet, you don't need to watch it, because I'll tell you everything that you need to know about this. But I would definitely recommend going and watching this a few times so you get familiar with Michael explaining this process of trading. Right, so let's jump onto the big cool presentation that we've got here, and it's not that big, it's very short. Conscious Day Trader, the Silver Bullet by ICT, and how I understand it and how you're going to understand it, how we're going to set up TradingView to make it super easy. We're going to make it so easy you won't believe how easy this strategy is. So let's jump on to the first slide, which is, when is this? How many ticks can I get, points, or whatever you're trading? The first thing that ICT stresses, and if I move my camera out of the way, for this to be a valid setup, it, at least in the Forex world, because I know you're trading Forex, you have to have a 15 pip setup. And it makes sense. If there's less than 15 pips, it doesn't make a lot of sense to trying to find an entry around this time. If there's a minimum of 15 pip move, and you can get 10 pips out of that, that would mean 5 handles, then it's worth doing. And you're going to have a few opportunities to do this, and it goes on about, if you're trading indices, you need at least 40 ticks, which is 10 points. If you're trading the Forex pairs, like you can see right here, he's talking about 15 pips. So what else do we need to know about this? That's pretty much it. Next slide, we're going to move on to what is the difficult part that people get confused, and we're going to make it really simple on TradingView, so you don't have to do anything. This will be all done with an indicator that I'm going to tell you how to adjust, and then we can have all this information on there. So there's why does this happen? ICT goes in to explain why this happens and why is this a high probability trade. You might be familiar with the previous daily highs and lows. You might be familiar with buy side and sell side liquidity. If you're not, you're going to see on the charts what we're talking about. But these are things that can validate a trade. Not all of these will happen at the same time. This is, for instance, this is not limited to these 7, but if you do know these 7 and you can identify them, then it makes it a valid trade for you to go in and trade it. The first one is previous daily high and low draw on liquidity. That can be very easily done. We're going to jump onto the daily, we're going to put some lines in, and we're going to see where the price is relative to the previous daily high and daily low. The next one is previous session high and low draw on liquidity. So if you're trading the Asian market, or the London market, or the New York market, where is the high and the low of the previous session? Next one is the previous week high and low. So that's going to be, we're going to go onto the weekly chart and we're going to make that market all up. Then return on the fourth one, we have a return on the current or old new week opening gap. So where did the week close? Where did it open? What is the gap? We're going to have that. If you have that, if you do a little bit of work before, every time you open your charts, you don't have to do all this. That's all there. So you know what you're looking for, you know how to trade it, then it's just literally execution. Classic ICT OTE, which is the optimal entry, and the 2022, which is the one that I learned with the fair value gaps. You don't need to know all these, and we're going to see that on the chart. We're going to make it super simple. So if you find ICT hard, what can you do to trade this in a simple manner and make loads of money? Because that's why we're doing it. So the first one that we're going to look is the London Open Silver Bullet. That happens at the London Open, during London Open, and that is a 1 hour, always on New York time. You will see ICT setting his time, which is GMT -4, and that's going to be key when we set up the indicator. So we've got 3 a.m. until 4 a.m. New York time. That's one opportunity in the day. The next one is the AM session of New York, so 10 a.m. till 11 a.m. So let's say you missed the London opportunity, or you can't trade the London opportunity. Now you've got a second opportunity to get your 10 pips in a day between the New York AM session, which is 10 a.m. until 11 a.m. And we're going to set that up as well. And the final, you're going to have 3 opportunities to find these setups in a day. It's going to be the PM session Silver Bullet, which is going to be between 2 p.m. until 3 p.m. New York time. Isn't that straightforward? So we have 3 hours in a day where we need to turn on the computer, look at the chart. If we don't find something, we don't trade it. And there you go. You can make 10 pips. Let's say you're trading a 5 lot with 10 pips. That's $500 in a day. Not bad. So, that's pretty much the time frames. Now we're going to jump onto TradingView and see how do we set this all up to make it really easy to trade. Okay, so here we are on the pound dollar. The first thing that we're going to do is look at the indicators. So we're going to click on indicators, and we're going to look at something that's called FX Market Sessions by Boyd Toki. So when we click on that, we're going to get this here, and then if we go onto the little gearbox here, we're going to set all these times up. We're going to make sure that GMT is -4. So what do we need to do? We need to have the London Silver Bullet, the New York Silver Bullet. So I'm going to write these in, which is the 10 till 11. And then we need the New York, let's do NY, we'll keep the chart cleaner. New York Silver Bullet PM session, which was from 2 until 3. And we're going to click on the session. So we have 3 sessions that we pre-registered on GMT -4. And it's going to give us 10 historical, so we can go back 10 sessions to see what's happened. So we've got the 3 to 4 a.m., 10 to 11, this is London Open, so London Silver Bullet, New York Silver Bullet between 10 and 11, and New York Silver Bullet PM session 2 till 3. If we press OK, actually we're going to click one more thing, which I like seeing, is the pips. That's going to tell us how many pips it's done during the Silver Bullet. You can see it right there, 25 pips. Boom, quite successful silver bullet entry if you're looking for 15 pips on the pound dollar. Press OK, and there we go. Ta-ta, we have our silver bullet set up all ready to go. Isn't that cool? Super easy. And now we already know that we've got 17 pips 0.5 in that London Open 1 hour. So we know we could have found that 10 pip move. Before we do all that, what we're going to do is go back to what we said. We wanted to see the previous daily high and the previous daily low. So how are you going to do that? We're going to go on to the daily. And these you're going to do it every day, right? You're going to set it once a day, and then you don't have to do anything else. You get really good at doing this really quick. And I like putting my horizontal ray onto the previous day, which is Thursday. So this is the previous day there. I've already set this. So what I did is I went on here and I wrote previous daily high. And then in style, you can style it how much you want, red and and then you can save that as a template like I've done here. And then every time you click on that line, double click on it, you go onto the template and you say, I want this to be the daily high. Okay, there we go, perfect. Now I'm going to get one or more of these and I'm going to do the same. You can press the command so it magnetizes. You can see it highlights it there every time I press the command on max. So then I'm going to highlight that, touch there on the bottom wick of the day. So that's the highest point and the lowest point. Double click on that, and this is going to be the previous daily low. I've done this green just because it gives me a nice little indication that is for buys, as in like we're going long, and red for shorts. And then we see where the price is ranging. Okay, so let's take this simple information and go back on a 15-minute. It started. Let's take the replay backs, and this is the current price. So this is what we're seeing. Okay. Now, what information do we know from the presentation? We know that we're looking for a previous daily high and low draw on liquidity. What does that mean? We need to find where liquidity is. Okay, so where is the liquidity on this range? The easiest way, guys, that I find out about this, you always look for equal highs on the previous, and I like going a higher time frame. So start on the 1 day, and we can see that we've had a huge push. Look at this, 1, 2, 3, 4, 5, 6 days, the pound pushing up. Okay, keep that information. So we're at very, the price is extending a lot higher than this level here. Okay, so we've taken out the highs here. Every high above it, you're going to find buy side liquidity, the stops above the buys, and the shorts will be sell side liquidity. Any swing low, you can find sell side liquidity and buy side liquidity above there. I like putting some boxes above there. So let's take the price here. Above this swing high here, we've got buy side liquidity. And I've done the same thing. I just wrote in buy side liquidity, BSL, saved it, and now I've got it there. So that's one. You can tell here on this swing high, buy side liquidity got taken out by these two daily candles. Remember, we're on a daily now. The price went even further up and pushed a lot higher. So the first thing you want to ask is what's the price doing? Where is it going? Okay. So if we're looking at the daily, it took out buy side liquidity and didn't come down. It did come down here, but then it got rejected and pushed back up. So the question is, where is the price going? And that, if you can't see it on the left side, well, we can see it there. Suddenly you've got a little bit of a picture. Okay. If you have done the ICT 2022 mentorship, you know about fair value gaps, and you can see them here. This has been filling up fair value gaps, and now it's tackling these highs here. But if you don't want to go detailed like this, we'll keep it really simple for the silver bullet. What we're looking for is the swing highs. So you've got a swing high there, and this is kind of like a continuous drop. So the most obvious swing high is here. So you can go above this and put another buy side liquidity. Remember, this is on a daily. And you do that, where's the next swing high is here. You keep marking the swing highs. Okay, that is where liquidity is lying from the buy side. What about the short side? Well, run your mouse down and you'll find the swing low here. So that there is sell side. Where is the next one? Well, there's no other swing here. Keep going down. There's a tiny one there, but the most obvious one is this one, right? So that's a big swing low. So over here is another sell side liquidity. This is all on the daily, guys. All right, so we'll do this once and we don't have to do it again because it takes a while to look at this. This is on the daily. So we've talked about the price pushing up, and we've got areas now where it can go to. Now within the next day, we have to understand, is this going to be a green day or a red day? It has had 6 green days, so there's likely that it's going to be the price retraces lower. If it does retrace lower, are we going to be able to find a short opportunity? Or if we think that it's going to go and push into this liquidity, like he says, a draw into the previous daily high and low on liquidity, we're going to have to go down the frames to do that because this is on a daily. But it helps to start thinking about what liquidity is from a daily level. If you can start identifying these liquidity areas, everything becomes very simple. So the biggest thing that we're going to do is identify where are the swing lows and where are the swing highs. What is this? What would you draw above this? You are right. If you said that, it's another buy side liquidity. So there we go. So we'll draw that and you would put in a buy side liquidity. These are all kind of like evened out. You don't stick out, do they? They don't, like, it's almost like a trending move upwards. So we can take another buy side liquidity. The next most obvious place is this one. And what's also quite interesting about this one is that there's another one next to it. So it's got equal highs. So we do like this as another buy side liquidity. Going down, is there any buy side, sell side liquidity here? Not really. You can say that this is equal lows there. Going down, look at this one. This is a very evident sell side liquidity. So you do this practice and you'll see very quickly you're getting a nice little graph of where liquidity lies. Right, so that's on the daily. You might be saying, okay, I got it now. Let's see how I'm going to make money from the Silver Bullet. Let's go down to the 4 hour. To the 4 hour, the picture starts playing itself out. So we can see that the price is on the high end of the previous daily high. So it's highly likely the sweep will be to the upside. Why? Because just look at this. These are 4 hours, so this is 1 a.m. So let's say we're trading right now, 24 pips to take the highs compared to 150 pips to take the lows. What is more likely to happen? Obviously to take the highs. So we need to see, is there any setup to take those highs? We go down to the hour. All right, so we can see now we've had this topped out, and it did take the highs here. Okay, we can see that. What time was that? The highs at 11 p.m. last night. It created that high there, and then it sold off. So now we're looking for high opportunities. What did this move do? It pushed down below this. What is this? A swing low. So it took out the swing low, and it hasn't taken this swing low. You know what swing lows are now. Swing lows are sell side liquidity. So as you go down, if I minimize this, now that you know about these, looking at the charts from the daily, we're going to do the same thing here. What is this below this swing here? Sell side liquidity. And it took it there. So I can label this sell side liquidity. Where did the price continue? It went down to take this one here, but it stopped. Below here is what? Sell side liquidity. You can see how easy you can mark liquidity on a graph. And here is the swing low, 2 red candles and then a pin up. So the sell side liquidity below this level here. We're not going to talk about fair value gaps because you don't need it at the moment. And you can do the same practice down here. If you don't like this one because it's a green candle and that swing here on the pin is not very clean, you go to the previous daily low, which is the other obvious sell side liquidity with equal lows below this level here. All right, so now we've put all our sell side liquidity. We're starting to get familiar with the price and what it's doing. This is on the hour. I'll give you a second. Where is buy side liquidity? It's so obvious, it's shouting itself out. If it's not, go a little bit further back on the video when we're talking about how to identify it on the dailies, and do that again until it becomes clear. Look for swing highs. Swing high there, swing high here. Combine that because it's pretty much equal highs. What lies above there? Buy stops. So buy side liquidity. Now you know how to find liquidity. Ta-da! Simple? If that sounds difficult, keep doing this until it becomes simple. Okay, so we've got the liquidity areas now on a 1 hour. Let's go down, 30 minutes. Anything changes? No, pretty much the same picture. What about 15 minutes? 15 minute, nothing changes? No. Okay, so we're good. So let's now bring up the London zone, which is the London kill zone. And it's also the silver bullet. It's going to take a second. Okay, so here we are, and we were drawing things from the daily. So what can we see here? We've had that push down that took out that sell side liquidity. Okay, so let's make it really simple. What do we think is going to happen? Okay, we think that it's going to draw up to take that buy side liquidity. So what we need to see, is there any opportunity within the 1 hour of that which it will give you that opportunity? So let's see, we're only looking for 10 pips. Okay, so we're going to make a box of 10 pips, which is that. The other requirement is we need to see a move that's 15 pip to validate this silver bullet trading. So let's jump on to the lower time frames. Let's go on to the 2 minute. And here we are. So the start of the London started there. What do we see? We see this push higher and then drops back down. This is where we're going to introduce the fair value gap. Okay, so this is one of the areas where Michael talks about. You can find an OTE, you can find the confluence of ICT, expansion away from. These are all different areas that you can see to decide where the price is going. So we need to find where is the price going for liquidity. So we've analyzed and we think that this price can go up to this area here into buy side liquidity to take that liquidity out. Doesn't matter if we get that wrong. In this occasion, not really, because it has provided both ways opportunity to make this silver bullet. But for now, we've identified that this is the area. So let's take the replay. This is the information we have before it starts. So we took out buy side liquidity here and it pushed back down and failed to take this sell side liquidity. And now we are looking for an opportunity to go long if it provides it to us as the draw towards this buy side liquidity. So the session starts. Nothing yet. What has happened right here? The price has pushed up. What do we know this is? That is a swing high. What's above the swing high? Buy stops. You know how to do this now. So the price has been pushing down. Where's the next one? Buy side liquidity that you should put in. You go up the level. Is there any swing high here? No. What's this? Another swing high. That's another buy side. You know how it works now. Where's the next one? Where's the next buy side? I go up. You have this one, and you would be right, okay, because we've got another fair value gap there, and I'll tell you what that means. But you do have that buy side liquidity there. But the biggest obvious one after this one is, if I go up, is this one. Look at this big one. And the next one is this one, which we already done. So you might say, why did you not put all these little ones? You can, but just to keep the chart clean, we're doing a bit the main ones, the big ones. Okay. So those are all the buy side liquidity. What about sell side? Sell side, that's a swing low. So now that becomes sell side. And we have the other sell side that's coming from a higher time frame below it. Okay, so there we go. So now we're looking for longs and what we want price to do. This is where fair value gaps and OTE, optimal entry from ICT. I would recommend you going and watching all this because you need to have some knowledge about what fair value gap is. And there's a lot of good videos out there, so go and learn about what fair value gap is. I'll just give you a quick brief on that so I can tell you about this entry. The fair value gap is a 3 candle formation, and if I minimize this, we need a gap between the top candle's wick to the first candle's wick. The price on right and left of this candle are not crossing each other. So what I'm looking at is that this low here and this high there, you see they haven't crossed each other. This candle here has all this space in between them. So this space here is what we call a fair value gap. And when I see this, I always put a box there and I extend it out like that. So now I know that if the price comes back into that fair value gap, that's my opportunity where I'm going to look to get my long position. Now in the silver bullet, what we're looking for is the price to take this liquidity, or if it takes this liquidity and we push that fair value gap up, for us to get that opportunity to go long. Let's see if it gave us that opportunity next. This is today's data, by the way. So prices come back in. Let's see where that candle closes. So that's closed here. So this is interesting. Now we move that fair value gap because is there another fair value gap that you can see here? If I take away the indicator, now the same thing is applied here. Okay, so we've got that fair value gap and we've got this fair value gap there. And I label that as fair value gap. So now we have 2 opportunities. I always go, you have to identify if there is an opportunity for a 15 pip move, okay? Where's it gonna be? If we believe that that liquidity of the previous daily high is gonna be hit, the next obvious closest option for the price to go to is to take this swing high here, correct? So let's see if is it worth taking a trade from here to here, 17 pips. It passes the 15 pip that Michael talks about, so it's a valid entry. So if we can find an entry here, we're gonna go long. Is it gonna give it to us? There we go, entry. Right there, into that fair value gap, we now have an entry and we're looking for 10 pips. Where's 10 pips? Roughly there. So let's see if that's going to work out. It's going to go down. Where would you put your stop? That's the good question. The stop, it's depending on where you've got the swing low here, which is how far away from your entry. That would be roughly a 1-to-1. So you're risking 1 to make 1. If you want to be better with your risk rewards, if you believe into the risk rewards, so then we're going to have that stop just below. You can put it below the fair value gap, so really tight. So that will be your entries here. The fair value gap stops here, So just below that gray zone is 1 pip. So let's give it a bit of room and let's say to 3 pips. Okay. Now, if the price goes down there, oh, just missed, and it took us out. So we would take out a loss on that for 3 pips. What happened next? It entered our second fair value gap. So now we're going to enter a position there. We closed that because we got stopped out. We would get an entry on that fair value gap just here. From there to get our 10 pips right there. So our next stop is going to go below this fair value gap, which is going to give us a stop of 5 pips. Remember, we lost 3 pips because we got stopped out. So let's see what happens. Price comes down and then continues. Boom. Just missed our stop. Voila. And we have a delivery of, let's say you want to include your previous loss as well, your 3 pips, so you can move your profit of that trade around. That has given you 18 pips. So if you wanted to be frugal to get your 10 pips, that would be your 13 pip there, including in 1 trade, taking this fair value gap, a losing trade, and getting in, not getting stopped out here. And look how beautiful that has worked today to the pip going upwards. So that is a valid silver bullet trade. So let's see how far would it have gone if you were wanting to hold this. The price went even higher. So that's why we need, where did it go? To that buy side liquidity. That's what we said. We want a minimum of 15 pips, but you can hold these for quite a while, 20 pips with this fair value entry. Beautiful trade today. And this is the 14th of Friday. So that will be a valid within an hour. So as long as you get your entry within this London Silver Bullet, it's valid. It doesn't mean that you have to close your entry outside this. You can hold it and you can run it. Let's see where it's going next. Look at that. We just took that, put that buy side liquidity in there. A nice, beautiful delivery to that level there. As you can see, you can take a losing trade for 3 pips and then you make up to 20 pips. So I think this is a very, very nice little easy way of trading ICT. 2 things you need to identify is where is liquidity to get a nice, start putting your liquidity levels onto the buy side and onto the sell side, and also identifying where fair value gaps is. What you can also do is, and I'm going to show you this quickly, the same way we did the daily, we go on to the weekly, because we do have the previous daily, previous weekly high and the previous weekly low. So you can put these lines that we did before, copy this, and that will go to the weekly high. So then you have another line that you can add to your trades. Like Michael said, previous session high, low on liquidity, previous weekly high and low. So you can do as many as you need of these if they help with your trading, but you don't have to. If this is enough with the previous daily high and low, what I just showed you, and we can do another example. For instance, let's go to the New York session before, and we turn this on, and New York session, this, let's take the replay. That's the beginning of the New York session. We're on the 1 minute chart. So what do we have to do straight away? This is now 10 a.m. New York open. We look for where the liquidity is. We go to the buy side liquidity. We add that buy side above the swing high. That's going to be your buy side liquidity. And below the swing low is your sell side liquidity. All right, so we would have to have the previous daily high and low, but let's say you have this and you've made your opportunity. Just with this information, we're going to see if we can look at what's going to happen to the price and make a trade. the price is showing tendencies for the downside. If it's going down, where will it be going? To that sell side liquidity. So for us to get an entry in this, we would have to find a trade within the New York Silver Bullet, which would have to be a break like there. Let's have a look. Is there a gap there? So look at this. There is a nice little gap, fair value gap, and now you know how to identify them between this bottom wick to that bottom wick, and we're going to call that a fair value gap on there. So that's the second one. That's the first fair value gap of this move. Now what do we need the price to do? We need the price to come back up, and we'll find an entry to go down to that sell side liquidity. Okay, let's see. It did. Where the price shows you only the full candle, but as you can see, if we go back one candle, we don't have a price in that fair value gap, so the price came, boom, tapped us in there. So let's see if that was a valid entry. Our entry would be in that fair value gap. We're looking for 10 pips. That's only 5 pips to there. We need to get all the way down to that sell side liquidity, and it would give us a 10 pip. Now, if you're like me, I like giving a little bit of room for the price, but let's try and do a tight and see what happens. Your stop would be just above that fair value gap there. So that's going to be not even 1. Let's call it 3 pips. So we're risking 3 pips, which would take us up here. We're risking 3 pips to make 10. Okay? Let's see what happens. Price comes down, and boom, another valid silver bullet. I like this. I might start doing it. We'll see. I'm not sure about the tight stops, but we're gonna have to look it up. But as you can see here, 2 quick sessions, and this has delivered really, really nicely into sell side. Beautiful trades, and you know, ICT is giving you this because it's easy and you can make money out of it. So we all have to thank him for providing this information. And what I'm trying to do is to make it in a way, maybe some people don't understand some things that he says, but others can connect with other people. So there you go. This is a simple way for you to use the silver bullet to make money, and you can do it 3 times in the day. We did a New York silver bullet, we did a London silver bullet. You can also do it in the PM session of the New York. So if you don't find an opportunity there, guess what? You can just don't trade. Come the next day, find a nice little entry, and happy days. I hope this has been helpful. If it has been helpful and you want to hear more about me, make sure you write down in the comments Discord, because the Discord will be coming out next week, and possibly, and you can also find my live trading, which we're going to start as soon as my family's health is back on track. We're going to be doing live trading, and we might, who knows, we might start doing some silver bullet trades as well. So I hope this has been useful. Make sure you like and subscribe to the channel. I hope you like these series as well of videos, and I'll see you next time. Have a good one.
I can't take no loss. I don't even know what it costs.